Hey everyone, welcome to another video. In this video, we'll discuss 5 money mistakes that you must avoid before entering your 30s. Well, the first one, and this is sort of a general one, it is lack of financial planning. Well, as awkward as it sounds, if you're married or in a relationship, then you must sit down with your partner and start planning your finances. Because once you're married, it is most likely your finances would be shared, and you cannot operate individually and not share anything regarding your plans with your partner. So therefore, you must sit down together as a couple and start planning, because failing to plan is planning to fail. And you must align two thought processes together in a common direction and work towards a common financial goal. The second mistake is a mistake of not insuring yourself, and I'm talking about term insurance or life insurance here. The older you get, the more expensive your premiums will become in buying a life insurance or a term insurance. To understand this, let's take the case of an example. Let's say you want to buy a life insurance with a risk or a policy cover of rupees 1 crore. In your 20s, you would have to shell out a premium as low as 800 rupees per month. When you near your 30s, this could rise to 1250 rupees a month. And when you near your 40s, it could be as high as 2000 rupees per month. So the earlier you purchase a life insurance policy, the lower the premiums you'd have to shell out from your pocket in getting one. And life insurance policy, in my opinion, is the first thing that you must get. The third mistake is the mistake of buying assets in FOMO or fear of missing out. Well, it's a stupid decision to buy an asset with a very high depreciation, in other words, a car, unless you really need it and not want it. Again, buying assets involves the concept of EMI, and one should see if your EMI is getting accommodated in the scheme of things. Whether even after accommodating EMI as an expenditure in your plan, you are still able to have some surplus money at the end of the month. Then buying an asset for your need is absolutely fine. Mistake number 4 is falling into the debt trap. Well, these days, getting credit cards or small easy loans without the need of having to pledge your assets have become relatively easy these days. But the moment you skip your interest payment due date and becomes a regular habit, then you fall into something called as the debt trap, otherwise known as the vicious circle. But there's a famous quote by Warren Buffett which says that if you buy things you do not need, then one day soon you will have to sell things you need. Well, this becomes the reality when you fall into the debt trap or the vicious circle. Point number 5 is to start building a corpus. Now, there are many ways to do this. And to start with, the most simple way is to have an SIP on a monthly basis, a systematic investment plan. Well, many of us go by the equation income minus expenditure is equal to savings, and then we lament and complain that this equation is not giving me enough savings at the end of the month. Well, you need to scrap this equation and go by the revised equation, which is basically income minus savings equal to expenditure. Here you find that automatically you're able to save before you spend, which contributes towards your investments and savings for your long-term and short-term purposes. And therefore, in the long term, it builds your corpus for retirement also. Well, I hope I was able to make things clear through this particular video. If you like the video, please do show your support to us by hitting the like button. If you want more videos like these on a regular basis by way of notifications, then you could think of subscribing to this channel. Till then, I'll see you guys in the next video. Take care and thank you.